Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Well, I must say, Fridays are supposed to be sort of, winding down into the weekend. Not a pickup in activity, but a slowdown in activity. I'm talking about news flow, but it's the exact opposite what has happened over the last, 12 hours or so with tariffs, and more tariffs. Another fresh sweeping set, which will be the focus here over the next 60 minutes or so into market open. We are coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Survey. Guys, morning.
Hi, morning folks. Morning Nigel, morning Prashant. Yeah. You really winding down? You live in the Donald Trump era. What are you talking about? There can never be a wind down. But yes, we have those big headlines to contend with. On pharma right now, it's not on generic drugs. Yes. It's on branded drugs, on IP-protected drugs. And we'll, of course, get to the implications.
Well, Trump's on a roll overnight. Particularly in the last 2 to 3 hours, he's been very, very active. So we'll address that. And yesterday's market action actually wasn't very encouraging by any stretch of imagination. Just that the Navratri color today is green. That's the lone hope.
But actually, pharma stocks were, I don't know if the market had an inkling of this or not, overall pharma stocks were under pressure yesterday.
Yeah, no, absolutely. It's been, are these those sectoral tariffs that he's been talking about under Section 232? We don't know. It looks like it. So let's take it from the top, right? And I won't start with the US market action, but I'll start with what has been announced. So Trump has delivered sweeping tariff shock. Essentially, the message is pretty simple. It's the same, which is build in America or pay a tariff if you're importing goods made outside of America into the US market and selling to the US consumer. So he's targeted big pharma. So when we say big pharma, basic difference, innovators, guys who make the original drugs, that's essentially big pharma. What big pharma refers to, Eli Lilly, the Roche, Novartis, Pfizer, those are the big pharma names. Whereas here in India, you got mostly generic players, companies which make copies of these drugs and sell at a fraction of price to the US. Of course, there is patented stuff here in India as well, but it is a small fraction of what is exported into the US. So that's point number one, right? Now, 100% tariffs on imported drugs unless US manufacturing begins. That is what has happened. That post will come up, and I just want to read that post up with regards to the tariff bit, or the pharma bit, and this is what it says, right? And I think the last portion is what is important. He says that, unless a company is building their pharmaceutical manufacturing plant in America and is building, he specifically says, will be defined as breaking ground and or under construction. And I think that is the most crucial part here, because most large US company, most large innovator companies, a lot of them are based out of Switzerland, many of them are in Germany, and of course the largest ones are in the US. All of them are building, will mostly qualify under the definition, which is they are in the process of building in America, as defined by that tweet. We'll wait for specific details, etc., but that's the first reading of the situation, and we'll get you updates, etc. But I think purely from a first-order impact point of view, there isn't very much impact. If you remember what's happened with semiconductors, something very similar happened. And all these companies came in and promised investments, etc. They were already, by the way, making investments in the US for one reason or the other. And there's been very little impact in terms of tariffs on semiconductors being brought in from outside, chips brought in from outside into America. So I think this seems very similar to that kind of a playbook. Second order, third order impact, these companies source from outside India. We'll have to see. We'll have to work through those implications, and we will get you that. Now, 25% tariff on heavy trucks as well has what has been impacted, but that's not it. The kitchen cabinets, bathroom vanities, unholstered furniture, and as I understand it, across at least most of these items, heavy trucks will try and get in touch with the management of Bharat Forge I think companies like Ashok Leyland, etc., export into the US, but we'll get you an implication. But I think the other stuff, it's all made in countries like Vietnam, Southeast Asia, China, etc. Very little here in India. It's made here, but not exported to the US. So that's some specifics. Now I come to the overnight market action, and here Nasdaq down about 0.5%. Dollar index has seen a meaningful move. We are now almost 98.5. 0.5% day before yesterday, 0.6% last night as well. Oil's moved up to almost $70 a barrel as well. So in terms of these macro markets, not looking all that great, at least as you start this morning. Nifty is closed yesterday below the daily average, key daily averages, right? I think 5 days in a row, the index has been down. The final support is 24,800. When I say final, basically a defense of this entire up move. I mean, you can see, after a 1,000-point move, an index can correct. But you got to define it somewhere that it's just a correction of this 1,000-point move, and then, the 1,000-point move, that rally will continue. So a defense of that move is 24,800. It's a 61.8% of the move, retracement of the move. So we'll see if this gets taken out or not. Bank Nifty slightly outperforming the Nifty. Here the support is the 20-day moving average, which comes in at 54,680. GIFT Nifty will give you a quick sense of how we're likely to start. We'll pick it up from there. 12 points, neither here nor there, at least at the word go. Nigel is standing by with the F&O stats and the picture there. Nigel, morning.
Well, morning. The big problem this week has been the FI selling, and that's outweighed the DI buying as well. And, in yesterday's trading session, they almost nullified each other. But particularly towards the final hour of trade, you had the FI selling. Nimish was telling us that could be some kind of selling that was due. And that's precisely what it played out. Even the gross volumes were extremely high. Short point was, yesterday was a disappointing trading session, and we broke some key support levels. Let's get to the other couple of points then. The FI as well in the index futures, they went ahead and they added short positions. 6,500 contracts is what they added. Short positioning continues at around 84%, though it's come off from around that 92.5%. It's come down to around 84%, though they continue to add shorts into the system. And now they're writing calls very, very aggressively, because in yesterday's trade, we just saw that they added close to around 1.5 call for every 1 put. So the writers were back in play in trade. And because of the kind of aggression we have seen on the call writing front, the PCR has come down. The PCR has come down to sub that 0.7 mark. It is at around 0.68. And we should get the 2 strikes up for you on the screen. The 25,000 call, massive open interest built up is what we saw. More than a crore shares getting added out there. But there is some glimmer of hope. The last straw that the bulls will be hanging on to is there were some signs of writing at around the 24,900 put, which tells you the 24,800 level becomes extremely important for today's trading session. You'll want the Nifty to, in fact, defend this on a closing basis, 24,800, 24,840 odd. While on the upside, the resistance comes in at around 25,100, going by the kind of writing we've seen on the call side. And the Nifty Bank, that yesterday was trying to show some kind of fight, but that gave it away as well. And now it's very, very close to the 20 DMA. You don't want this mark to get broken at all. That's close to around 400 to 500 points away from current levels. So the Nifty Bank will have to show some fight, given that the tech index has been under the weather. And let's see whether or not we're due for a bit of a relief rally on the tech index itself. That's down close to 5.5% in this week. Moving to one more point I wanted to make with regard to the margin trading funding book. Remember, that was at around 60 to 70,000 crores. It moved up to around 80,000 crores. Now it's at elevated levels at around 98,000 crores. And that's why you're seeing pain in the broader markets as well. So you'll want the headline index to get its act together, because otherwise, this will become a bit of a spot of bother, particularly for the broader markets. And finally, the stock that we're looking at, the one that we told you about yesterday, HFCL, was likely to come out of the F&O ban. That's precisely what's happened. So let's keep an eye out on this one for today.
Okay, all right. By the way, Asia is quite negative. Most markets across the region are simply carrying on from the weak close that we had on Wall Street. So even a market like Seng, for instance, Hong Kong, is down about 1%. Japan is down. A lot of pharma stocks there, for instance, the likes of Daiichi, Sankyo, etc., all of them tumbling. And remember that yesterday there was a massive upward revision in US third quarter GDP. At an annualized level, it's at 3.8, so 3.8%, almost touching 4% that particular quarter. Maybe it was a sort of preponement of a lot of imports, etc. activity before the tariffs kicked in. But whatever it is, that's also gotten the market worried about how quickly the Fed can do the next rate cut. So that's the picture. Let's quickly get to the equity call of the morning. And it's coming in from HSBC. Herald Vanderlind of HSBC says, while Indian equities have underperformed emerging markets by 32 percentage points since mid-September 24, the worst performance since 2001, we now find the market attractive. He says in cricketing terms, he expects it to return to form. He adds valuations have fallen. The premium to the region is back at historical levels, while lower inflation and easing measures should support growth. He thinks earnings are near the bottom and are set to improve. He says their 11 top picks would include names like Marico, Trent, Mahindra & Mahindra, Phoenix Mills, HDFC Bank, ICICI Lombard, Ultratech Cement, Infosys, Adani Ports, Divi's Labs and NTPC. So turning quite optimistic on the Indian market right now. That's HSBC.